Let's talk about buildings. Let's talk about investment in property. Joining us now, Grigg, the CEO of British Land. And good morning to you, Chris.
Hello, good morning.
Just reporting your numbers then. Full year underlying EPS coming in ahead of estimates. Some have contrasted you with and your attitude to speculative development, your business's attitude to speculative development, with others in the sector, and said that you've taken more risk, I suppose. Are you happy with the risks you've taken, and will you continue to assess risk in that way?
Yeah, so I mean, we were prepared, I guess. Way back to 2010, we took quite a bold move in terms of investment. That worked very well for us again. And this time again, we've seen good demand for our buildings, our properties, the areas where we develop. And so it felt sensible to us on a controlled risk basis to continue to build new offices and to redevelop offices. Again, what we've seen is very good take-up in our space. We did something like 1 million square feet of lettings this year. That, to put it in perspective, is 4 times more than we did the previous year.
OK, Manus.
Chris, a very good morning to you. Look, Anna's just broken a little bit more news there in terms of the retail side of the world. If we look at perhaps some of your portfolio, you've got Sainsbury's Asda deal, and of course there'll be a covenant from Sainsbury's about committing to keep stores open and build the brand. But if we look at perhaps there might be some opportunities here for you in terms of redevelopment. Stores that close may well need to be redevelopment. Is this an opportunity for you? How do you look at this kind of deal at the moment in terms of your overall portfolio?
Sure. Well, over the last few years, we've actually reduced our exposure to superstores. We took the view that over time it was going to end up being quite a volatile sector. There were concerns that the supermarkets wouldn't need as much space. So we've been working hard to reduce our exposure to that sector. So we're in the decent position, thanks to our own actions, if you will, of having less exposure. I do think there will be some opportunities. We've sold a few sites still with those Sainsbury's and historically Tesco on, and those have been redeveloped into housing. That's worked well for us, and obviously continues that story about making sure that the country has enough housing available.
So that's the superstores in terms of the grocery market. What about department stores and that side of things? Some seem to be more in trouble than others, but generally this is a sector that is challenged, the department stores and that kind of offering. How much exposure do you still have to that kind of retail? Again, we've been reducing our exposure to the standalone stores, whether they be supermarkets or things like Debenhams. We still have exposure to them. We've started from a position in all these situations where we're very full, virtually physically full, and so that means even if you do see people wanting to reduce their estates, we're usually in a good position to put somebody else in that position. Now, of course, we're also recognising that it's tough out there for the retailers, and we have to work with them to get the optimal result.
Chris, to what extent, if at all, around your board table, is Brexit precluding you, halting you, stopping you or slowing you down from major investment decisions in the UK?
I think that the whole conversation about Brexit inevitably has taken a lot of time at the board table. It's certainly slowed down some of the decisions of people who want to take space with us. But what has been consistently the case is there are plenty of businesses in the UK who continue to want to be either locally or globally headquartered here. And that demand for space has worked well for us. In terms of our own decision making, of course Brexit has been a consideration, but we have taken the view that we'd be driven by what our customers are saying in particular, and our customers have continued to make decisions around wanting high-quality space in and around London.
Let's talk about Canada Water. You submitted plans earlier this week, big new project, really big new project for you. How optimistic are you around this project? And as a gauge of that optimism, are you willing to start work if you don't have tenants in place, for example?
Well, it'll be a while. These planning decisions take a long time. It'll probably take us a year before we're ready to go. And it can be longer than that. But look, we would start with a position where we're very enthusiastic about the project. We'll obviously take a decision at the time when we can actually go. But sitting here today, I'd say there'd be a good chance that we would go. And the other thing is we've been really pleased by the level of interest already, kind of by the conversations we're having and people seeing what we're planning to do down there.
Chris, I love the story, actually, that we wrote about your company yesterday. You're developing on the Hipster Express. Now, the Hipster Express, of course, has got many connotations to it, but one of them is, of course, the way we work, the way in which we use space and share space. You have your business Story, which is about shared working space. How much more, if Anna and I, if I survive another 5 years, if you and I get together in 5 years' time, and I say to you, I know she's laughing, if we get together in 5 years' time and I say to you, right, what percentage is Story of your business? Because we've irrevocably changed how we work.
That's right. So we started Story, we're developing it quite quickly because, to your point, we think people are changing the way they work. We're focusing on small companies as well as big companies, and frankly, big companies like that extra degree of flexibility too. In terms of how much of our business it could be, I could easily see it being 10% of our office space in the next few years.
So WeWork, IWG, Story, it's quite a structural change we're seeing. Another structural change around rental housing is getting huge amounts of interest from pension funds and others, and you've talked about it. What are the opportunities there, and what are the threats if we were to see a change in government here in the UK?
Well, the first thing to say is we think there's good structural demand. Like it or not, as housing has got more expensive relative to incomes, there are a lot of people who will need to rent, and a lot of people, by the way, who will choose to rent for all sorts of reasons. So we think that structural increase in demand overall, provided increasingly by professional landlords, should be a good thing, and we believe that'll be a sector for us. We already have opportunities in terms of places like Canada Water, where we have land already, and so we see that as becoming a bigger part of our business. And it comes back to what Manna said, really. The way that people are working and living is changing, and there's kind of greater sense of commingling, so that mixed use aspect of our business is very important.
Chris, can I ask you just very briefly, Anna and I spend our lives talking about bonds until literally it is the Bloomberg way. We talk about bonds all the time. Yields are rising. How much of a challenge is that for you in terms of the yield proposition that you put in front of investors?
It's a great point. As you know, interest rates in the UK have been low for a long time. That's unequivocally been a factor in the health, if you like, of commercial real estate in this country over the last 5 or 7 years. What we still see, however, is quite a big gap between where interest rates are and where property yields are. So our view is that gives you quite a big cushion before property yields have to go up. And of course, we see a lot of international interest in yields and real estate in London in particular, but the UK more generally. And typically, those people are comparing us with yields, property yields around the world, and it looks good value to a lot of people.
So the global investor